Boom. We are pre-recorded today, ladies and gentlemen. It's a very exciting Tuesday morning of April the 30th. We're going to be diving into the charts, taking a look at some news, just, the normal things. And like we said, we'll be working on our kind of vlog regular updates, so get excited. And also for the private Bear Den members, check your email. The first of our newsletters was released, and we've had fantastic responses so far. We're very excited to be pumping out more content. We've got a deep dive into EOS, so once a month we're also going to do, a PDF that's called the Deep Divers, where we dive into the top tokens that are in our Bear Den. So that gives us at least the next 12 months of work, because we have around 15 tokens on board already. With that in mind, let's dive in and take a look at the charts. One of the first things on my mind here is actually chatting about the dollar recession and the potentiality of this. Now, I'm not an economics student by any means. Everything that I've learned today, I've learned through reading around on the internet, listening to other great speakers. For those of you that haven't, check out Michael Maloney's The Secrets of Money. Very informative video. Very, very important to understand some of the fundamentals behind what's going on in the markets today. So what I have up here is actually some economic research by the Federal Reserve Bank of St. Louis, and what we're looking at is the velocity of the monetary supply over the last bunch of years. Now, as you can see, since 2008, we've actually been in a steady decline of the currency supply, or the velocity of currency. Now, velocity of currency is basically like, okay, say I make $50 from a 5-minute transaction, right? And then I go and I spend 25 of that on getting someone on Fiverr to produce me a cool looking infographic, right? That $25 represents half of the original value. If I save the other 25, that goes into lockup. So velocity is showing us how much money is actually moving through the ecosystem. And as you can see here, it's been on a steady decline since 2000. And now the reason, look here, in 2018, we're at around 1400. So if we read down here, this is an important part. I'm just gonna read this too before we drop into the charts. And this is basically some of the fundamental approaches for what's initially wrong in the US dollar space and why something like Bitcoin is so valuable. So, the velocity of money is the frequency at which one unit of currency is used to purchase domestically produce goods or services within a given time period. In other words, it is the number of times the dollar is spent to buy goods or services per unit of time. If the velocity of money is increasing, then more transactions are occurring between individuals in this specific economy. The frequency of currency exchange can then be used to determine the velocity of a given component of the money supply, providing the insight into whether consumers and businesses are saving and or spending. There are several components of this money supply, M1, M2, and MZM, which is and M3 is no longer tracked by the Federal Reserve. These components are arranged into the spectrum of the narrowest and broadest. Considered M1 is the narrowest compound. M1 is the monetary supply of currency in circulations. It's every note, coin, traveler check, non-bank issuers, demand deposits, etc. And the decreasing velocity of M1 might indicate a fewer short-term consumption transactions were taking place. We can think of this shorter-term transaction as consumption we might make on an everyday basis. Now, the M2, which is what we're currently charting, is actually a component that includes M1 in addition to savings deposits, certificates of deposits less than $100,000, and money markets for individuals. Comparing the velocities of M1 and M2 provides the insight to how quickly the economy is spending and how quickly it is saving. Now, the reason this is important is because it means everybody is in a tight-knit saving space, and that's actually productive. One of the reasons why we think Bitcoin is so valuable is because it teaches people to save. You don't want to spend something that you know is going up in price. And this brings us into direct contradiction with what the IMF is claiming as its negative interest rates. And we've actually looked at this article before. It's coming out from the blog of the IMF. So this is a directly related and released IMF product, essentially, and this is cashing in how negative interest rates work. This is essentially pushed into the ecosystem to make it so that there should be more velocity, because they realize people have been saving instead of spending. Negative interest rates also attack your savings. So whereas Bitcoin goes up in value if I decide to save it over the long term, the cash or US dollar world is looking at how do we make you spend it. You'll actually be basically taxed or hit with penalties via the negative interest rates for the money that you're not spending, whether it's into businesses or your regular assets and acquisitions on a daily basis, because again, this is charting the M2 money supply. Anyways, fascinating information here, because it's really important to remind ourselves why Bitcoin is so damn valuable. It's so valuable because the monetary supply is currently controlled and manipulated by those who are at the Federal Reserve through these off-chart kind of nonsensical behaviors. Anyways, I wanted to drop into that because this was actually just released on the or just updated on the 26th of April. I will leave this chart down below as well. But with that in mind, let's just dive into the Bitcoin charts. We saw a nice little spike up here to touch the EMA. We were looking at this yesterday. We said we expected to see that bounce up to the 200 moving average, and we did. We haven't touched it yet though, so I suspect maybe 52.86 is where we'll go from. Still feeling fairly bearish, although I'm not going to come up to an exact assertion until we look out on the further time charts. So if we actually go out onto the weekly and the monthly time charts for Bitcoin, you can see a much clearer story, especially with the exponential moving averages. We have not been able to close with volume above the 50-day, the 50-day moving average. Yes, is that correct? No, the 100-day, both the 100 and the 50-day moving averages. Excuse me, I need to zoom out there for a second. So if you take a look here, we've hit that top a few times. Now, as we scroll in on the daily, again, this is what's important, I think, kind of the fanning in and out of our time frames. We see you've got the 200-day moving average down here around 44.25. So I do suspect we will test this area. That's very likely. We'd actually said that since we dropped down from the $6,000 mark. So we're still in the exact same place we thought we would be when we started to drop around the $5,800 area, the retracement of the B wave back up to around the $5,400 to $5,600 area, and then come down to test the $4,200 to $4,300 area. Now the real conjecture comes into play of when we go out and look at the weekly chart and zoom out a little further, because the 200 weekly moving average is down here at around $3,500. Again, this is likely where we will see the retest of the C wave. Now, if it breaks 3,500 and goes anywhere below that, yes, we're going to see the confirmation of anywhere between that $1,000 to $2,500 mark that we were looking at to begin with. Very, very bearish indicator if that were to happen. Now again, if we drop into Litecoin here really quickly, Litecoin actually bounced right off the moving averages. We said that in our video yesterday, was to look for a bounce. We saw a nice 7% bounce off of that moving average. Where was it here? We were looking at it on the daily when we said that, so let's make sure we're looking at the same charts. Boom. So here's that bounce. See how I said we closed below the 50-day exponential moving average, and then I suspected a bounce or close down below here. So we didn't close below $66, so we came back up above to test the exponential moving averages. Again, we're still seeing a short signal through the cloud here, and we've actually just broken through the cloud on both buy and sell pressures. So it'll be interesting to keep an eye on Litecoin. Again, some of the conjecture here might be that Litecoin is kind of front-running the market as it did back in 2015. So we're keeping a close eye on this, as well as Ethereum, because see, these are some of our top market movers. We think it's important to keep an eye on them in general because it will just be generally well helpful. Now, Ethereum, on the other hand, is currently sitting on the bottom of the cloud versus Bitcoin. Now, if we look at it in the US dollars, again, I like to look at both, even though I think Bitcoin is way more valuable than US dollars. The US dollar has no value. So unless you're interested in charting things that have no real value, aside from the bullshit that people think, well, then I think you're charting it wrong. But that's just my conjecture. There's no wrong way to do anything. But in my operating assumption, I want more Bitcoin. I don't care about dollars. I'm using this to increase my Bitcoin portfolio. If you want to increase your dollar portfolio, you should probably start a business. Or if you want to get into day trading, swing trading, learn how to take profits when we're at the high, and then funnel that into more businesses or other assets. I think I'm breathing in some dog hair. I got to get an air cleaner here. I believe I just breathed in. Piro, clean your hair up. Anyways, don't you wish dogs could do their own homework? Anyways. Point of this is Ethereum on the dollar chart looks stronger, right? And that's what I don't care about. I don't care about Ethereum to dollar. This entire ecosystem is relating itself to Bitcoin. It has been doing it since day one. All the big boys want more Bitcoin. They realize the same fundamental problem with the deflationary currency that I do. You want as much of it as you possibly can while you can get it. So this is why I think charting in Bitcoin is important. I also chart in US dollars because it just gives me a better general sentiment of the market as a whole. Now you can't chart Bitcoin versus Bitcoin because that's always 1-to-1. And that's the purpose. That's the real money here, not the US dollar. Anyways, I wanted to make that explicative. I wanted to explain that. I think I used that term right. Probably read a thesaurus here a little bit more often just for fun. Anyways, point of this is everything looks like it's going to be following Bitcoin. So with that in mind, regardless if you're charting Ethereum to Litecoin or Bitcoin, etc., I think the fundamental part here is to keep an eye on Bitcoin. Because yes, even though Bitcoin's price might go down and Ethereum's price goes down relative to Bitcoin, it's still relative to one Bitcoin. The US dollar, on the other hand, is absolutely worthless in the long term. And I fundamentally believe that. Otherwise, I would not have bought any Bitcoin when it was $90. Anyways, let's take a quick look at the S&P 500. Again, it broke back down below the all-time highs. It did try to push through it. Not a great sign. It only pushed it up on the wick. And then also with the DXY, which is us charting the dollar format, it broke through and then very quickly broke back down. Now, yesterday I was ranting about my disbelief of the markets. Now, I also want to go back to some of the previous videos. In some of the previous videos I had said, and I had mentioned multiple times, that if we were going to see weakness in other emerging markets, they were likely going to run to the US dollar and to the US dollar stock market. So regardless of if they're printing more money, there's definitely enough fear in the ecosystem to have people funnel back to the US dollar from other emerging markets. And I think that's likely what we're seeing. And also, I still don't bet against the fact that the Federal Reserve, an inherently corrupt structure which had no oversight, could, or not, maybe they're not, but they could, because they have no oversight, just print money whenever they want and hold these markets up. They've been buying distressed assets, doing that for a very long time. So what would stop them now? Anyways, Tio with the Arcane Bear, smash that thumbs up button. If you're new to the Bear family, please subscribe to our free newsletter. We'll be sending that out again here in a few days. Also, if you already know you enjoy this content, you can sign up with the Bear Club by going to arcanebear.com/club. You get the notes, you get access to all of the PDFs that we've been writing, the infographics, the 2 newsletters now. Apparently once every one or 2 months, we're going to do a deep dive from our legal team that just goes through and just rips up 20 to 30 pages of reports on single tokens, like massively in-depth reports. And then the general newsletter, which is a few of us as writers that produce content everywhere from, what's happening in the general stock markets, the dollar versus Bitcoin, and just our general sentiments all together. So we're very grateful for all of your support. We have well over 300 members signed up now, and we're doing great. Our first newsletter came out today, and it looks fantastic. So thank you guys all for joining us. It's been such a wonderful ride together. I'm looking forward to seeing you all again soon. It's Tio with the Arcane Bear, signing off for the rest of the day as we see you guys on the other side.